President Xi is still in South Korea and could look to capitalize on President Trump's absence at a forum of countries representing more than half of global trade. Xi says China is open and will become even more open to the rest of the world, hoping to strike a sharp contrast to the protectionist streak shown by the U.S. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian equities climb near record highs while U.S. futures advance as strong earnings from Amazon and Apple lift sentiment again. We continue to explore bubble risk fears around AI. Nuveen's global investment strategist Laura Cooper will be joining us with her view.
We are still to understand exactly what the outcome of the discussions between the US authorities and the Chinese authorities will deliver in terms of rare earth in particular, which is, as you know, a very material segment of the supply chains in quite a few sectors, including the automotive sector, but the energy sector as well.
We'll get reaction to Lagarde's risk assessment from Sweden's Deputy Prime Minister Ebba Busch, who also serves as Minister for Energy, Business and Industry. Plus, a look at how payments giants like Visa and Mastercard are preparing for the AI age. Mastercard's Chief Commercial Payments Officer Raj Seshadri will be joining us exclusively. Chinese President Xi Jinping is urging countries to jointly maintain the stability and smooth flow of supply chains. That's according to state news agency Xinhua, citing a readout of a speech he's set to deliver at the APEC Leaders Summit later Friday. Xi's comments follow his meeting yesterday with President Trump, where they struck a one-year trade truce. Washington has agreed to halve fentanyl-related tariffs and extend a pause on some of its so-called reciprocal levies. Beijing, for its part, will resume soybean purchases and rare earth flows. U.S. Treasury Secretary Scott Bessent says he's optimistic the truce will hold.
My guess is a year from now we'll be back at the table, and we'll get another delay, another roll, because what everyone misses is the Chinese have rare earths, but we have President Trump's threat on tariffs. He gave the team maximum negotiating leverage.
For more, our Chief North Asia correspondent Stephen Angle joins us live from outside the APEC Leaders Summit venue in Jeonju. Steve, of course, it is about the truce. The question is really how long it will last.
Well, sure, that is the big question, and the follow-through on these pledges. Keep in mind, a lot of these things that you just ran through are not necessarily signed treaties. There was an agreement and a handshake and goodwill across the table between Donald Trump and Xi Jinping, following, of course, 5 rounds of negotiations around the world, in Geneva, London, and more recently in Kuala Lumpur for that framework agreement, to which those two leaders yesterday at the Busan airport were able to kind of solidify. And now it's up to the two nations to follow through on these pledges. So again, it's not an outright treaty. It is a truce. It's a prolonged truce, one that has to, according to Donald Trump, be sort of renegotiated every year. So again, the proof will be in the pudding on how this good intent will be basically carried through to a lasting coexistence, if not a peace treaty, if you will. But Xi Jinping essentially, we've already gotten a readout, Haslinda, of his speech that he's going to be giving here momentarily at APEC, and it touches on a lot of very similar themes that he has talked about consistently, and that is a support of the multilateral approach and support for the institutions that support multilateralism, like the World Trade Organization. And you mentioned at the top also resilient supply chains and sticking together in Asia Pacific are key tenets to his 5-point plan, which he will be introducing.
Steve, what's the tone on the ground? I mean, are APEC leaders optimistic on the back of what was signed between the U.S. and China?
Sure. Well, there's different tones depending on who you're listening to and who's on the stage giving such speeches. Look, the first couple of days, Donald Trump really garnered much of the front of the stage and his meetings here at APEC. But after he met with Xi Jinping yesterday in Busan, he flew back to Washington. It's now Xi Jinping's time today to give his speech, to have his bilats. He'll be meeting with Mark Carney, for one, of Canada. He'll be meeting with Sanae Takaichi, the new Prime Minister of Japan. Lots to talk about there. Already, Takaichi-san has already spoken to the President of Korea. They both are reaffirming that their peaceful coexistence will continue despite their historical legacy differences, no doubt. But Xi Jinping, we're going to be waiting to hear his speech and then how people respond to that. Because, again, I'll just paraphrase what Xi Jinping is going to say. He says, we must adhere to the principles of joining hands rather than letting go, and extending rather than breaking supply chains. So he is going to continually talk about this today, and that is regional inclusion with other Asia-Pacific partners, and he said the world as well. And as well, he will allude to the recently completed 15th five-year plan that was being constructed in the fourth plenum, talking about China will continue to open up to the rest of the world.
Steve, thank you so much for that. Our Chief North Asia correspondent, Stephen Angle, outside the APEC Leaders Summit venue, a point person there, by the way. Now, aside from trade developments, tech earnings and AI also dominated the headlines this week. Amazon shares surged in extended trading after the company said its cloud unit delivered its strongest growth in almost 3 years. Apple shares also rising after posting a revenue beat and offering a bullish holiday forecast. Bloomberg MLive strategists believe the strong results should help the S&P 500 reach new highs. Now, meanwhile, Meta also found a record-shattering demand for its bond sale, even as its shares plunged on Thursday. The company sold $30 billion worth of bonds, drawing the most orders ever at $125 billion. The outcome signals that bond investors are looking past any concerns about its AI spending plans. The frenzy over AI has also helped Asian stocks outperform the world this year. It's also transforming the region's markets in a way that has fund managers racing to keep up. Bloomberg's Asia equities reporter Winnie Xu is with us. And Winnie, how is this playing out in Asian markets?
Yeah, exactly. So we've been knowing about this whole tech concentration problem in the U.S. for quite some time already. But right now we are seeing, especially this year, that it's changing Asia's markets. You're talking about TSMC now taking up almost 45% of the TAIEX index, and Samsung, SK Hynix combined about 30% of Kospi, and even the chip tester Advantest now is the highest has the highest weighting when it comes to Nikkei 225. So things have changed quite a bit. And it's really affecting investors' positioning, especially for those who are looking at Asia ex-Japan, because they usually have a cap of 10% when it comes to investing in individual stocks. So they have to look for other opportunities outside of these big tech names.
So what's the way forward? What are some of the themes that we're tracking right now?
Yeah, so in terms of how, they are looking at this theme and how they are positioning, basically investors are expecting this tech concentration to continue in the short term or in the near term, actually, because when we look at earnings, whether it's the recent earnings from Advantest, from Samsung, SK Hynix, all surprised to the upside and pointing to solid AI demand to come. So in order for investors to, prepare for further tech concentration in the region, they are looking for opportunities, for example, around the competitors. We are hearing that investors positioning into Tencent, Foxconn Industrials, for example, and also Aberdeen for their fund. They are telling us that they are looking for opportunities along the TSMC supply chain so that they can benefit from TSMC, but also make sure that they don't get restrained from that 10% TSMC cap. So really looking along the supply chains, whether it's in Taiwan or like the competitors who can also benefit from the AI trend.
Winnie, thank you so much for that perspective. Bloomberg's Winnie Shu there. Let's get more on the relentless nature of the AI boom with Laura Cooper. She is head of macro credit and global investment strategist at Nuveen, which manages more than $1 trillion in assets. Also joining us, MLive executive editor Mark Hudmore. Laura, let's start with you. I mean, the trade talks are now passé, just like that. We're back focusing again on AI, and it does seem like the momentum is building.
And I think the momentum is building because we're clearly seeing in the earnings reports just how much we are starting to see this revenue traction on the back of some of this AI build out. I think the dominant theme continues to be the CapEx coming through. I mean, just looking at the hyperscalers alone, they're estimated to invest more than $350 billion so far this year. That's a 42% increase from a year ago. And I think investors, yes, there's a little bit of skepticism at the margin of will we actually see the returns on investment from some of this spending? But I think for now, we're not necessarily seeing those jitters being overwhelmed. So I think once again, it's just being focused on this AI theme continuing to dominate.
So Mark, forget about that debate whether this is a bubble that's about to bust.
So I think there's a couple of things. When you identify a bubble in markets, one of the easiest ways to make money in markets is to identify a bubble and get on the bubble. That's what you should do. I think there's
because the bubble can last for some time before it busts.
There's an assumption. I think it's a particular problem within the news side and strategy side, analysis side, away from trading seats. That identify a bubble, that means it's bearish. So that's a bubble. We should sell it. No. If you find a bubble, you want to get on it while it's inflating. You obviously want to get off before it bursts. But I think that's the most important thing is to say that identifying a bubble is easy. They happen all the time. So to be bearish, you have to say it's going to burst soon. Now, I am someone who's very firmly in the camp that the AI capex is a bubble. It's a massive bubble. And I think when it bursts, it's going to burst horrendously. It's going to cause just chaos across markets. But is it close to bursting? I don't think so. I'm entirely open-minded because I think it's a big bubble. But to me, it's probably a late 2026 story. I don't know. I'm entirely open-minded. Maybe something will happen that will change that view. But everything we're getting through in earnings is so positive. The story at the moment is so positive. We're still inflating the bubble. Now, so to me, this is not close to bursting. And I think AI is completely dominating markets. But at the moment, that's a positive driver. It's a reason to be bullish, not bearish.
So Laura, get on the bandwagon. It's not too late. I mean, it's not too expensive.
I think it's still the trade to be in, certainly through the end of the year and through 2026. I think there's probably kind of threefold risks that we'd be watching for. The first is around really what we've seen is a lack of leverage, which is actually constructive for the space. I think the more that we see this AI spend being built out, through actual bond sales and the debt side, rather than what's been driven, the cash flow side, I think that's could potentially be worrisome. As well, if we start to see even just guidance that we're going to see a pullback or a waning of the AI spend, even though that's inevitable at some point, maybe that could be a signal to investors of a shift in sentiment. That could spur a drawdown. And then third, I think just investors have been paying this premium for AI stocks on the expectation that we will see significant returns on some of these investments. If those don't start to materialize quickly enough to justify these blowout AI capex numbers, I think investors will start to turn on that trade and rotate back into more of a defensive positioning. But to Mark's point, I think fundamentals right now remain supportive. Speculation is probably playing a little bit more in the frothy price action. I think that's more of a late 2026 story.
But the thing is, the MEX 7 is not the only way to play it. We heard from Winnie slightly earlier, right? You can play the supply chains.
There's loads of ways to play this, and I think it depends what time horizon you want. I think if you're a short-term trader, you should probably just play the momentum, the obvious names. I don't think it depends. So I think the people who want to be smart about it are the people who are going, hey, look, I want to invest. And I think if you want to invest, you actually don't play the obvious names. There are still some assets. I'm not saying they're discounted, but they have a much smaller premium and where they're sustainable. The problem is that the trade's already extended out enough that there are less obvious places. So, 6 months, maybe a year ago or so, we were kind of talking about, you need to get into the energy sector. You need to think about the data centers. That's all now exploded as well. So I think now for the people to find the more discounted plays, they need to do much deeper research.
The thing is, you don't know it's a bubble until it bursts, right? It's not a bubble until
you do know
it
it's
does.
a bubble. You just don't, it's not a problematic bubble.
Well,
we know it's a bubble. I'm just saying it's not a problematic one.
Without people anticipating.
No. I dispute that. The point is, we were talking about a bubble for so long that people gave up calling it bursting. And this is my point. As in, we are talking about the dot-com bubble being a bubble into its bubble. And then suddenly it's like, everyone's going, this is crazy. And then the people who are saying it was crazy had to feel quiet because they felt embarrassed. Well, actually, it's just going to off another 30%, 40%, gone up again. In October 1999, this was October 1999 or 90, I'm got my year on 1998, like the market collapsed like about 20, 30%. And then it doubled again within the next like 6 months. You know, it was crazy. But so all the bears went quiet. We knew it was a bubble, it's just when it bursts. And I think this time, everyone again knows it's a bubble, but that doesn't necessarily mean you're being bearish.
But there's still risks. Concentration risks. I mean, with all the money going to AI, and with all the investment money going to AI, there is that concentration risk.
Certainly. I mean, we look at the top 5 companies in the S&P 500 account for about a third of the index in market cap. I mean, that certainly does suggest there is concentration risk. And I think in the conversations that I have with clients, increasingly they want to have that exposure to the momentum trade in the US, but they are looking for ways to diversify and trying to find those pockets of opportunity that Mark alluded to. I mean, European equities, Japanese equities, China tech continues to be a story that we're looking into. I think you can't be short the tech trade at this juncture, but certainly I think there are options.
You talk about diversification. Is it diversify away from U.S. tech, away from the tech theme? How are you diversifying to protect yourself from a sell-off?
I would say we are looking certainly at other opportunities besides just looking at that tech trade in particular. You still have to be invested in that tech trade, but I mean, certain pockets. I mean, in Europe, for example, we're having this incredible stimulus come through. We expect that's going to bolster defense even further, infrastructure, energy. So there are these pockets of opportunity that are cheaply valued. In Japan as well, even Korean equities looking at the tech trade. So you can still play tech, just perhaps not within those particular Mag 7, and then even diversify into more AI adjacent type of themes. Like Mark mentioned, data centers, a lot of that is in the price, but there's probably still some upside, at least in the near term.
And
I'm with Laura that the idea is that US exceptionalism ended December to February this year, December last year to February this year. And people, I think, mistook that as being this whole sell America trade they got for help. They're two different things. You can never have sell America as a theme for like more than a couple of weeks, because obviously it's the world's largest economy. It's it's got many advantages, structural advantages. So you can never, bearishness is only ever a tactical thing. But US exceptionalism did end, and a lot of people kind of go, what are you talking about? US stocks are at records. Now the point is that US is no longer outperforming the rest of the world. This year has been the rest of the world outperforming the US, only marginally, not dramatic. And it's still a debate whether US exceptionalism is taking a break or is it actually over. Now I think it's firmly over.
But some people are of the view that AI is driving that US exceptionalism now.
But there's not US exceptionalism. US stocks aren't outperforming this year. The rest of the world is outperforming. Now, it's only marginal, but I think that's going to be a growing theme. I actually think the underperformance of US this year, which is only slight, that started since December to February last year, is now going to actually, is going to be the trend of the next few years. So to me, absolutely, you actually want to play this to the rest of the world and away from US stocks.
US exceptionalism, still alive, dead?
I think it is, certainly. I mean, I kind of disagree with Mark in the sense that
may disagree, Laura.
But I think where we are seeing it play out most predominantly is in dollar weakness. Like, it's very unusual to have the S&P 500 at record highs, and yet the dollar continues to be under pressure. I mean, certainly depreciated quite a bit so far this year. And increasingly, we are seeing investors outside of the U.S. want to hedge those U.S. equity exposures because they don't want to take that dollar risk. And I think as we head into 2026, that dollar depreciation story will continue to kind of be a dominant theme. And certainly that's acting as a headwind for those non-U.S. investors looking to kind of diversify.
I really hate agreeing with Laura, but she's actually right. Like, the dollar is a large part of this theory. So U.S. stocks are going to underperform in terms of for a global investor because at some point it's going to be the currency side. People are going to increasingly FX hedge. It's not just about like on a pure local currency terms where U.S. stocks going to underperform. It's just that valuation premium is going to slowly decrease over time, and people are going to increasingly FX hedge. But between the combination of the dollar side and the performance, you want to be the rest of the world, not US stocks. But that's not a bearish view on US stocks, it's just that the rest of the world has more opportunities.
Okay, we're talking about AI, we're talking about tech. Here's an example of how the AI mania around Nvidia can cook up gains for sectors far removed from technology. Nvidia's CEO Jensen Huang fired up Korean fried chicken-related stocks after a meal in Seoul went viral. Huang was spotted enjoying the fried staple with Samsung Electronics chair J.Y. Lee and Unimoto executive chair Chung Yusun at Kwanbu Chicken. Now, while Kwanbu isn't listed, rival restaurant operator Kyochon F&B surged as much as 20% earlier today before reversing gains. Shares of poultry processor Cherry Bro jumped as much as 30%, while Neuromecha, which makes chicken frying robots, is also surging. Now, Laura, I mean, this is amazing, right? Anything linked to AI, anything linked to, I guess, Nvidia, which sent stocks way higher. I mean, it makes me a little bit nervous that it's not fundamental sometimes, isn't it?
I mean, I can certainly say I've never looked at fried chicken as an indicator of bubble gauges, but perhaps to Mark's point, the more that we see these kind of pockets of these things driving idiosyncratic price action, I think maybe that is a sign that maybe late cycle bubble
But it's also a sign that you can play Asian stocks, Asian tech, when it comes to this AI theme. I mean, we've seen that playing out in the likes of, Samsung, SK Hynix. They're also having a great run.
You can't move on from the fact that you've just brought us fried chicken clips of Jensen's Brown and try to pretend this is about a proper thing about Asian stocks. Of course they're Asian stocks plays. We didn't need the fried chicken divergence. I can't take this seriously. You're indulging it. No, it is a sign of the exuberance in the markets. But like all these themes, you get these signs of exuberance for like potentially years before like the bubble bursts. Like everything we're doing, the AI completely dominates everything else in markets. We can pretend to talk about the Fed and trade doesn't data. It's all irrelevant. It's all irrelevant. AI is the only thing that matters. So we've got to work out when the AI bubble bursts. The breadth thing is, breadth again is not a reason to be bearish. Breadth is just saying it's all about AI. We know that, right? So we've got to work out when does the AI bubble burst. And you want to watch for all these indicators. And I'm nervous, but that could be the case for another year. I don't know. But my guess is...
What's the indicators? What are the key indicators?
I think Laura outlined some excellent ones earlier about, on the credit side, the leverage taken, the AI thing. But I think, we've got this big whole lot of circular deals. It's when someone kind of goes, hey, I don't have the revenues to do these deals, and one of those circular deals starts collapsing, and then the next one starts collapsing. At the moment, it is a house of cards in some ways. But a house of cards, you still need one of the cards to be removed. And I don't see where that card's going to be removed. I said I'll remain open-minded. But to me, I'm going to be looking for the bubble to burst every single week until it bursts. But I'm not expecting it to happen until probably 6 months away.
Laura, how are you positioned? How would you advise us to be positioned in this market?
Well, we're still overweight U.S. large caps, but being very selective in the Mag 7. I mean, we're clearly seeing that in terms of the price action this week. Some are better positioned than others. But I think to Mark's point, this is really about kind of the non-U.S. diversification story, looking in those global equities and looking across fixed income as well as kind of that portfolio hedge. We're certainly seeing a favorable backdrop for emerging market debt, still attractive yields outside of the U.S. I think this is still an opportune time for investors, despite AI driving everything, to Mark's point.
Bubble's not busting yet, at least that's what they say. Laura Cooper, head of macro credit and global investment strategist, and Nuveen, and MLife executive editor, Mark Moore. Thank you so much for that. Now, still ahead this hour, Swedish Deputy Prime Minister Ebba Busch will be joining us to discuss the U.S.-China trade truce and what it means for Europe. Keep it here with us. This is Bloomberg. Welcome back to Insight. Let's take a look at how markets are faring. The MSCI Asia-Pac Index currently just barely in positive territory. They're trying to regain momentum, hovering, though, at record highs on strong earnings from Amazon as well as Apple. Hang Seng giving up those gains, currently down by about 0.7%. Apple, by the way, beat revenue estimates, offered a bullish holiday forecast. In terms of the FX space, take a look where we are in terms of the currencies in this part of the world. We know the dollars has rallied to the highest level in 3 months on the back of the Fed. JPY currently at 153.94. Plenty more ahead. Keep it here with us. This is Bloomberg.
I don't see relations between US and China ever being warm in the coming period.
We have to maintain substantial tariffs because we have a very unbalanced relationship. We are transferring enormous amounts of wealth overseas, but specifically to China.
To what extent de-risking is actually happening is debatable, but I do think that both sides are going to reduce their mutual dependencies whilst continuing to trade and do business with one another elsewhere.
There's a huge uplift. I think it's almost like a burden lifted up everyone's shoulders, right? Because this overhang has been there. The uncertainty of what's happening on trade with regarding to US and China has impacted markets everywhere.
Some of our guests this week sharing their insights on the trade tensions between the U.S. and China. ECB President Christine Lagarde also weighed in on the potential risks coming out of the U.S.-China trade talks as the central bank held rates for a third straight meeting.
One risk that we have not yet seen materialize and could be a risk to the upside, so we will continue to be attentive to that, is the risk that would result from potential bottlenecks and disruption in the supply chain. We are still to understand exactly what the outcome of the discussions between the US authorities and the Chinese authorities will deliver in terms of rare earth in particular, which is, as you know, a very material segment of the supply chains in quite a few sectors, including the automotive sector, but the energy sector as well. It's not a big amount in terms of actual value, but it's critical at the juncture where it is situated in the production chain. But that risk has not yet materialized, so we shall see.
Let's get perspective from Ebba Busch, Sweden's Deputy Prime Minister and also the Minister for Energy, Business and Industry. Deputy Prime Minister, good to have you with us.
Thank you.
We heard from Madame Lagarde how she's concerned about the rare earth supply chain. I mean, we saw how the two sides, the US and China, had an agreement. China has agreed to delay the curbs on rare earths for at least a year. How hopeful are you about that?
No, I'm very hopeful that will happen, but I'm not, putting all my bets to it. I think that the last few years have really shown the value of predictability. Sweden is such a predictable country. We're a stable country. If you make an agreement with a Swede, if you make an agreement with Busch, then what you see is what you get. And I think the value to that has also increased. I have hope that we will now see a dampening of the very hot part of this trade turmoil and trade war, to be frank, that we have seen in the last year. It has affected Swedish businesses a lot. It has affected also, I would say, the relationship between the countries. This had not been a good period. So I'm hoping for a dampening of this, and I have hope that there will be a prolongation to this.
The thing is, the world is dependent on China for rare earths. What does Europe need to do to wean itself of its dependence on China?
Well, we need to find our own confidence again. I don't know how many scared European leaders that I've met over the last few years, everyone being very concerned with what other countries are doing, looking to China, looking to the US, not knowing what we'll wake up to next on X. Will the playing field have been completely shifted from one day to another? I think it's time for us to see the value that we have within our own realms. Just look at the Kingdom of Sweden. We have one of the largest rare earth elements deposits in the very northern part of Sweden, in Kiruna. And I think we should do our own homework, and Sweden is doing that now with a new mineral strategy, seeing how we can get up to speed and more predictability when it comes to the mining sector of Sweden and the whole of Europe.
So given the capacity that you're anticipating from your own mines, how big a role do you think Sweden can play in the global rare earth supply chain?
If you look at what we know that we have in the Swedish ground, we stand at the brink of becoming yet again a global powerhouse when it comes to the mining sector. I mean, we already have some of the absolute best capabilities when it comes to the mining sector. If you look at the Global Innovation Index, we're number 2 when it comes to innovation, and that is also reflected within the mining sector. But if you look at the hard value in the soil, it's massive. And if we just zoom out a little bit, I mean, everyone knows the dependence and the effects of the dependence that we had of a Russian gas, the massive effects that had. I don't say this lightly, but I would say that dependence will look like a nice summer day in comparison to the dependence that we have to China when it comes to all of those critical materials and metals that are needed for both digitalization and the green transition.
When talking about rare earths, it's fine and good because they say that, you can find sources everywhere. The key thing is the ability, the appetite to absorb the environmental effects. China could do it because it was willing to tolerate it. Its people were willing to tolerate it. For a country like Sweden and other developed nations, the appetite to absorb, the spillover into the environment may not be there.
No, but let's be frank. If you look at a mine in Sweden, for example, and I would just visit it 2.4 kilometers down into the ground of Sweden. I was just there a few weeks ago with Commissioner Seshadri. That type of mine looks completely different to a mine in Congo. And that's precisely my point. We can provide a completely different way of getting those critical metals and minerals that are needed moving forward by our way of mining. And this is what we're looking both to export that capability and expertise, but also make sure that we rather do it in Sweden and in Europe rather than to be this dependent off of China. And we are already seeing quite worrisome reports from different businesses where they are being asked to give up information that they should not be giving away to get access to the critical metals and minerals that are needed for their core business. So, the only way to move forward from this is not by grander rhetorics. It's actually doing our own European homework. And Sweden is doing that now by making sure that we can provide some of the riches that we have to the global market.
One of the key concerns for Europe, for the EU, is actually Russia. The bloc has imposed new sanctions on Russian oil as well. We know that the Swedish Navy does provide some service in helping to track fleets which carry Russian oil. How effective do you think it has been?
Well, first of all, Sweden is also doing our homework when it comes to security issues. We now have a clear set target of reaching 5% of GDP by 2030. We'll reach that with the budget that we set out to Parliament already by next year, reaching 2.8%. And that also increases our capability of providing this type of tracking capacity, of course, of Russian oil and gas. This is difficult. And this is the reason why it's so important that we try to keep as good track of this as possible, but it's always going to be complicated. The best way is to make sure you move away from these fossil sources altogether and provide other stable energy sources, like, for example, nuclear power.
We know that Russian oil company Lukoil is now looking to sell its international assets because of the sanctions imposed on Russia. And we're also reading reports that those assets are getting sold to a Swedish oil billionaire. What's your take on such transactions?
Well, of course, I'm happy that Lukoil is stressed. They should be. That's exactly where we wanted these sanctions to hit. But I want it to be felt. And of course, I don't sanction it then being sold to other parts, and I would not sanction and be very happy if it ended up in the hands of a Swede.
And we know that all these sanctions are in part to address the war with Ukraine. I'm just wondering what the status is when it comes to Sweden providing or selling 150 jets to Ukraine. What's the status of that?
Well, so I was very happy to, together with my Prime Minister Ulf Kristersson, to welcome President Zelensky once again to Sweden, this time on site in Linköping. And as I sat down with him, it's very clear that they are now also really putting a pin in sort of like the hope for tomorrow and building a stronger Ukraine for tomorrow that also builds resilience on the ground today. And the Jas Gripen is one of the best firefighters in the world. To quote another beer commercial, probably the best fighter in the world.
Well, the question is on payment,
yeah.
Right? How will Ukraine pay for it? What discussions are there?
Well, of course, we are still pushing for forward from a Swedish perspective to unlock those Russian assets that have been kept since part of the world the beginning of the full-scale invasion, and that we have held on increasingly since then. And that is still what we're pushing for, to enable those deposits to be used also in the long term for these type of purchases that would rebuild Ukraine.
So you're confident that you will get the payment for the sale of the 150 jets to Ukraine?
Yes, and this is also because I believe in the long-term commitment to Ukraine. This is our number one foreign policy priority, is the long-term support for the Ukraine people. That also entails the rebuilding of Ukraine and making sure that they have deterrence enough. And having a fleet of 100 to 150 JAS Gripen would be a very good way of contributing to that deterrence, making sure Ukraine is not hit again.
Deputy Prime Minister, people in Europe are watching the elections, the Dutch elections, really closely. And there is a sense that there has been a pull away from the far right. Is that a sense you're getting as well?
I think it's very difficult. I think it's very difficult to say. And in general, I would say the antidote to dangerous populism is not necessarily more populism, but it's public legitimacy. And I have an 10-year-old back home. My 10-year-old asked me, I'm not going to say what country we were talking about, but they asked me, why have this country elected a political leader that is not playing by the rules? And I said that, well, some of the political leaders that are playing by the rules, we've failed at our job. So we need to find a way as a rules-based country, all of the countries that are rules-based, to actually make sure we get a win, do the job. And then I think tempo is of the essence. And if a rules-based country can pave the way and show it is possible to do this at a much higher speed, then public legitimacy will also increase. This is the reason why I've been pushing so hard on European leaders to do the homework on security, to do the homework on the mining sector and all of those metals and minerals that are needed, and thirdly, on the energy sector. Make sure that it's not, my budding rhetorics that is conveying in a sharp negotiation, but actually hard power in terms of our dependence and our sovereignty from other states with whom we do not share the same values.
What is the biggest risk you see out there as the world shifts, as the global order shifts?
I would say it is that democracies failed to... Let's answer the question from this perspective. I'm worried that Europe managed not to build strong democracies, but rather huge bureaucracies. And this is the reason why we are seeing a decay in support for democracies. If you look at value surveys among the younger generation, and then someone steps in and say, well, screw the rules. We're going to do it this way instead, and then show that it is possible to do it up to speed. Well, then that will also gain public support for that very reason. So this is why I'm concerned to make sure that we have long-term support for strong democratic values by showing you can stand by them and still get up to tempo and get the job done. That is the Swedish leadership that we are trying to contribute to with this. And of course, there are some quite dark clouds on the skies. We need to show realistic hope, and then you need to be able to show deliverance on all of this rhetorics.
Deputy Prime Minister, we thank you so much for joining us today.
Thank you.
Ebba Busch, Swedish Deputy Prime Minister and Minister for Energy, Business and Industry. Coming up, we'll speak with Mastercard Chief Commercial Payments Officer Raj Seshadri on the payment network's earnings beat. Keep it here with us. This is Bloomberg. Well, welcome back to Insight. Healthy consumer and corporate spending are benefiting the world's biggest payment networks. Visa reported fiscal fourth quarter earnings that topped estimates as consumers continued to swipe, tap, and insert their credit cards to transact globally. And Mastercard is the latest to report third quarter earnings that beat analyst estimates as consumer and corporate spending remained robust. Joining us exclusively to discuss this and more is Seshadri, Chief Commercial Payments Officer at Mastercard. Raj, good to have you with us. First off, I want to get your perspective, insights from all the talks we've been having here in Asia, from ASEAN to APAC at this point in time. The messaging, the optics have been pretty positive. I'm just wondering how you see that trickling through the economy and perhaps the business.
No, absolutely. It's there are headwinds and tailwinds at any given time, and we've lived through a lot of uncertainty, positivity right now. And as you know, we announced our earnings last night, and we're finding resilience in both consumer payments and corporate payments, like you said. In fact, our Mastercard Economic Institute is seeing good economic growth, good labor markets, good wage growth, especially real wage growth relative to inflation. And in that context, what we've been focused on is making businesses stronger. And we're seeing an acceleration in B2B payments to make payments stronger, which then make businesses stronger. Because if you make the payments smarter, it actually helps the businesses by releasing working capital and reducing end-to-end expenses and reducing risk. And what does that do? Well, strong businesses means more economic growth, particularly in the SME space, because small businesses power the economy.
So what's the outlook for 2026? Can you put some numbers to it? What kind of growth are you anticipating?
What we're seeing, the trend that we're seeing is, you as a consumer, you're so used to good digital experiences that are seamless, secure, simple. And what we're seeing is that translating into the business world now, into B2B payments. Because historically, there's been a lot more friction with legacy systems and manual processes. And what we're seeing now is a secular shift happening. There's $125 trillion in B2B payments. And a lot of that is now getting digitized with the data and the payment moving together and the processes becoming much more efficient and software driven. And we have a proprietary virtual card engine where we can actually embed that and couple the data and the payment. And what that does is makes the payment much more intelligent. And it allows a business, for example, to release working capital, optimize cash flows, release liquidity, because you can leverage all the trade terms you have in the supply chain between buyers and suppliers. You can leverage lending. You can reduce end-to-end expenses by having data and the payment be together. You can deploy AI into it. In terms of risk, you can enhance compliance. You can reduce fraud. And so what all of that does is make the business stronger. And that's what really we're seeing, which is a very positive outlook. We're seeing an accelerated momentum in the secular shift as we move to card and data-rich digital experiences.
So we talk about how the payments space has been disrupted. We're talking about real-time payment this time around, right? How are you capitalizing on that? What are you offering, and how do you build on that?
Yes, so we have both the card network, which is real-time, and we have cross-border solutions, which does real-time or near real-time payments and money movement in about 150 currencies in 200 countries. So a lot of this is about bringing it to bear in a company, whether it's a large corporation or an SME, so that they can digitize and make their payments and their money movement much more efficient, much more intelligent, and to unlock value that the business then gets more resilient as a result of it. And then if the business is more resilient, it's good for the economy. And this is particularly true in the SME space, because what we're finding is if you bring that into supply chains and make the supply chains much more digital, every small business now has a smartphone at a minimum. And so if you can leverage digitization and innovate around the payment and around the supply chain buyer-seller processes, you bring a level of resilience, not just to the business, which is important, but actually through the business to the entire economy. And so that's what's exciting about this.
And just to build on that, I'm just wondering, to capitalize further, are there any acquisition plans? Because, there have been a lot of reports suggesting that, you're on the cusp of signing that deal with Zero Hash. Is that confirmed? And what would that mean for Mastercard?
So we're always looking at corporate development and acquisitions. We set a strategy and then we decide whether we want to build, buy, or partner. And I can't comment on any future acquisitions, but as you know, we've done, in the cybersecurity space, we have Recorded Future. We bring their capabilities together with our Mastercard fraud capabilities. In the personalization space, we bought Dynamic Yield. We have a great partnership with Corpay to bring a full range of, cross-border services to financial institutions, and also to extend Corpay's reach into additional currencies and corridors. And so we're always looking to build, buy, or partner, and we'll continue to do that across the spaces.
Are you looking to pivot that strategy, not just partnerships, but owning infrastructure? Does that make sense? Is that the way to go?
Our strategy is pretty set. I think we've talked about it now for a while. We talked about it in the investor community meeting last year. It is about driving consumer payments, really driving secular shift in commercial payments and money movement, and then having services wrapped around all of this. Because what we find is as you drive payments growth, you generate data and you can build services that enhance the value of payments. And as you deploy those services into the marketplace, what that does is drive further payments growth. And this payment, the type of payments and money movement we're really engaged with are digital, they're data rich, the payment and data travel together. And so you can really drive a level of reconciliation and efficiency and release working capital it's remarkable.
What's key to that is, of course, stablecoin. And it is something that MasterCard has been looking at really closely. It's tied up with Circle. How do you build on that?
Yes, we're definitely very actively working with stablecoin. In fact, cross-border services, which I just mentioned a little while ago, we've introduced stablecoin as another currency. Because what it does, so we already transact in about 150 currencies. We're now adding stablecoin to expand that suite of currencies. What that does is provide more choice to consumers and businesses in how they move money and how they make payments. And as you expand choice, you expand the addressable market. You expand the types of use cases you can go after. And that just helps accelerate the secular shift and drive greater B2B, greater business strength, and it unlocks B2B payments and B2B strength, which then drives economic growth. So these things all end in robust, resilient economies.
And all enough to counter the competition coming from the likes of PayPal and Stripe.
We work across the ecosystem, and there's plenty of opportunity. And as I was saying, there's $125 trillion in B2B payments. If I just take the payment portion of it and set aside the money movement and other pieces of it, that's $80 trillion. Of that $80 trillion, only $3 trillion is carded. So we can talk about the card market, and of course we compete very aggressively in that market. But the other $77 trillion is ripe for driving out friction and optimizing and digitizing and making sure the data and the money moves together so that you can deploy, AI and other capabilities. So this is all about the secular shift opportunity that's out there.
So no short of opportunities. Raj, good to have you with us. Join us again, please. Raj Seshadri, Chief Commercial Payments Officer at Mastercard. Now, starting next week, Insight is expanding to 2 hours of live coverage. We'll bring you even more of our crucial insights and sharp analysis with interviews from Eldridge Acre Partners CEO Warren Washburger and Knight Frank's Senior Partner Will Birdmore. We'll also be putting a spotlight on India's growing economy as we get fresh views from HDFC Asset Management CEO Navneet Munot and former RBI Governor Raghuram Rajan. That is it for today's show. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.